Homeowners insurance policies can be non-renewed for several reasons. The most common of which is exposure management. What does that mean? Well, every insurance company has to review its portfolio periodically and look at what they call maximum probable loss. It literally boils down to they insure too many homes in your zip code or even in your neighborhood or on your street. As a matter of fact, in my neighborhood at one point, we thought, hey, we've got this company that's really good on houses built in the 1980s, and let's talk to all of our neighbors. And once we got past 3 policies, we actually got a call from underwriting, stop writing so many houses on the same street. And that can boil down to windstorm. It can boil down to 1 house catches fire and then 2 do and then 3 do, and you see the domino effect. But insurance companies are built to distribute risk over large samples. So that means a lot of policyholders and a lot of geography. So if they see themselves becoming too densely represented in a small area, they will take measures to spread that risk out so that if disaster does strike, it's not going to be completely catastrophic to their ability to pay your claims. Another reason, speaking of paying claims, is money. After all, insurance is not altruism. You are contractually transferring your financial risk to the insurance company. That's what a policy does. It literally says if the worst happens, the insurance company will pay instead of you. But you will pay the insurance company what we refer to academically as a known loss, or the price of your insurance policy, the premium, to guarantee that if something really outrageous happens, you won't have to pay any more. Maybe a deductible or something like that, but the insurance company will bear the brunt of the disaster, the transfer of risk. So, many Florida homeowners insurance companies that operate only here in the state or regionally don't have the financial strength of the Fortune 500 companies that you're used to seeing regular TV commercials for. So what do? They buy a lot of reinsurance. It means they're financially leveraged. It means that if a hurricane comes through and causes $1 billion in damage, that insurance company may only really be exposed for as little as 1 or 2 million. They turn around and do what's called cede your policy to a reinsurer. They pay a premium to the reinsurer, just like you pay a premium to them, and the reinsurer accepts risk above a certain level. Remember that 1 or 2 million? Once they hit that stopgap, what really happens is they turn around, file a claim with the reinsurer, who cuts them a check, and then they cut you a check. So they have a significant cost of that reinsurance, but that financial leverage keeps the system running so that Floridians can buy homeowners insurance from these domestic companies. It doesn't mean they're bad, it doesn't mean they're underfunded. What it means is, and we've talked about this extensively in some other episodes, please check out the entirety of our YouTube channel. Because of the regulatory environment here in the state of Florida, and because of our state legislature's refusal to act appropriately towards the insurance market, we're left with a largely domestic market. A lot of our national players, some of whom have returned recently, just don't want to do business here, and it's not because of sinkholes or hurricanes. It's because of our elected representatives, specifically in the state Senate in Tallahassee, although the issues are pervasive throughout the entire system of state government when it comes to being dealt with appropriately.